and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita. Very quickly, let's quickly take stock of what's happening with the Tata Group of stocks and the impact of N. Chandra's resignation. Of course, maybe effective February 2027, but obviously creates that big overhang for the Tata Group as a whole. TCS is the top loser on the Nifty 50 index. Stocks like Titan, even a Tata Consumer, facing a bit of pressure in trade post that announcement. You're seeing that pressure visibly across the board with regard to the Tata Group of stocks. I wonder what Tata Chemicals is doing, because that one was holding on to the green for a while post that announcement. So that was the one which was actually doing fairly okay. Tata Motors also slipping in trade as we speak. So that one too seeing some bit of pressure. But let me go across to Anurag Joshi. Anurag, no reappointment post February 2027 when his term ends. No resolution either after 6 months. He's now withdrawn himself from even consideration, is what it seems. A board is yet to finalize a successor. Succession planning is now going to be the immediate focus. Anurag, what exactly are you hearing? Tell us.
N. Chandrasekaran has expressed his desire to step down in a letter to the board of Tata Sons. N. Chandrasekaran has said that he's not seeking reappointment as the Tata Sons chairman after February 2027, when his current term comes to an end. Now, the key challenge before the Tatas will be succession planning, and it is still very premature and early days about to say that 6 months ahead who will be the successor to Chandra. But clearly, the Tatas will need to move fast about on the succession planning, on the transition, to identify the next successor. And obviously, there are three scenarios. That firstly, that they choose someone in-house, like, for example, one of the group CEOs to come at the helm after Chandra leaves, or probably Noel Tata, who's the chairman of Tata Trust. Currently, he steps in and takes charge as the chairman of Tata Sons. And the third is that they look for an outside talent. But all these possibilities are all out in the air right now, because I mean there is no clarity as such about what option the Tatas would go for. Clearly, one caveat I would mention that if Noel Tata decides to take the responsibility of running Tata Sons, clearly there is a clause in the article of association of Tata Sons, which says, and Tata Trust, which says that you cannot be the chairman of Tata Trust and Tata Sons at the same time. Noel Tata is the chairman of Tata Trust currently, so that is an issue. So we'll need to see how things pan out ahead.
Yeah, and what this does is obviously creates an overhang for Tata Group stocks, but it's not a good time to talk about that. Let's talk about what N. Chandra's Tata Sons tenure has delivered. Several major strategic wins, but also some significant misses. On one hand, there's JLR's revival and Tata Consumer's transformation that we've seen over the last 5 to 6 years. But Air India's turnaround still remains one of the drags, one of the problems. Tata Digital is the other one, which continues to burn cash. Ashesha here with the scorecard.
Well, yes. First up, let's talk about Tata Motors and the turnaround we have seen in JLR over the last few years. It was acquired in FY19 when it was incurring losses to the tune of about 3.6 euros. Now remember, flashback to FY25, where it has reported record profitability, net cash and best ever margins in the history of the company. In fact, the target for FY29 that Tata Group has set for JLR is to become net debt free and 5 lakh crore Indian rupees of revenue for FY29. So that's as far as JLR is concerned. Let's also put the spotlight on a couple of other companies and the kind kind of transformation that we have seen under N. Chandra's leadership. And let's talk about Tata Consumer in that case, where it was earlier largely a broader FMCG platform, but now the company is focusing on debt reduction. It is also focusing on India operations as far as Tata Steel is concerned. They've expanded Tata Consumer Products. Tata Steel is doing good. Of course, Europe continues to remain a concern for Tata Steel, but otherwise, deleveraging continues to remain a key focus area. Let's also talk about group restructuring. Remember, Tata Motors, CV and PV was demerged last year. That was a big group level restructuring that we had seen. Tata Capital IPO in 2025 was another big trigger for the entire group. And other than that, they've also forayed into semiconductors with a total investment of about 1.2 lakh crore rupees. And they've also entered into several other new businesses over the last few years, whether it is semiconductors, iPhone manufacturing in India, and so on and so forth. Let's also talk about Air India then. Remember, it was originally founded by Tata Group earlier in the 1980s. In 2021, Tata again won the bid for Air India. In 2022, Tata Group completed the takeover of Air India, but reported losses in 2026 stood at about 22,000 crores. So the turnaround for Air India clearly has been slower than what the street was working with. The crash that happened last year in June exposes operational challenges and the reputational risk that Air India faces even today after being reacquired by Tata Group. So the turnaround clearly has been slow, and the group and Air India in particular continues to incur losses despite the turnaround that the company has been doing. Let's also talk about a couple of other ventures then, and let's start with Tata Digital. About 5,000 crore of loss is what it incurred in FY26. Losses continue to widen. It continues to burn cash as far as Tata Digital is concerned. Remember, a Tata New app, that was another app that was in the works. A lot of investment was being done for that, but there is no clear path to profitability, and thousands of crores were being invested on Big Basket, Tata One MG, and Chroma. So these were some of the misses under N. Chandra's tenure over the last nearly 7 to 8 years of him being the chairperson of Tata Sons. Meanwhile, let's also talk about a couple of other businesses. Tata Consumer Products clearly has been a big driver for the group going forward and the transformation that we have seen. These are the stock returns that are flashing for you on your screens, and some stocks, of course, have done phenomenally well over the last few years under his leadership from 2017 to current. On the flip side, we have Tata Motors, which underwent some amount of restructuring, which is why we have seen some adjustment on the stock. We also have TCS, which have given about 100% returns, but of course that is also because of the larger IT impact that we have seen over the last few months. But all in all, yes, 2017 was when N. Chandra became the chairperson of Tata Sons, and clearly it's an end of an era, and several businesses, of course, have transformed under his leadership over the last few years.
All right. Thank you so much for that, Shesha, and comprehensively covering how his tenure has been for shareholders of various Tata Group companies. And it's obviously the end of an era. N. Chandrasekaran deciding to hang up his boots in February of 2027. And a new chairman will likely take charge post that. So that's, of course, the big headline. But I'll quickly switch focus. Suvankar Sen, Managing Director and CEO at Senco Gold, joins us. Now, the numbers were slightly on the weaker side, Suvankar, and it came as a bit of a surprise for the street as well, because you had a couple of tailwinds. Of course, gold prices came off, but what we saw was that you had that duty on gold, which was hiked from 6 to 16%. Talk to us about what's happened on margins, Suvankar, because I think that's where the larger concern of the street currently resides.
So, if you've seen the results, there was a 67% growth overall. And we have, in retail, we've grown by almost 50%. So overall, because the gold prices have been on an upward trend year on year, that has driven in terms of sales performance. The sales were driven largely by the old gold exchange, because from the month of May and June, after the duty got increased and there was an appeal by our Honorable Prime Minister, where we could, how we could reduce the import of gold. So the consumer sentiments were on the lower side, and we wanted to promote old gold exchange in a large manner. And we all know that when we do old gold exchange, usually the margins, there is some kind of an impact. So that was one of the reasons why the margins are on the lower side. We also have seen that if we compare it from an overall guidance perspective, we've always been saying that our PAT percentage should be at about 4.5% for the whole year. And the EBITDA is about 7.5 to 7.8%. So particularly for this particular quarter, against the sentiments, the heat wave, overall the sales, April had been a phenomenal month, but May and June has been comparatively lower. So we have done our bit of driving the consumers to come to the stores, to increase footfalls, and this is what it is. But it really, for us, it's not a worry. We are still very much confident that the 4.5% PAT or a 7.5% odd EBITDA is very much in place. We could see a lot of increase in diamond jewelry sales also, which is building up on the overall profitability. And after that 60% growth, if you look at the current performance of July and August as we are speaking, we are growing at about 25% year on year as well, building up for the plan for the upcoming festive season in Q3. So for us, I think that we are positive, and yes, maybe with the 60% plus growth that we saw on top line, people were expecting that the PAT could also grow to that extent. But I see that this particular quarter was a quarter to really drive the numbers and ensure consumers came in against the negative sentiment, and we've done a good job. And I think we'll continue with our performance of growth, both in terms of profit and in terms of top line as well.
So the 7.5% EBITDA margin, which you're looking to clock for full year, what changes for you, and does it change as early as Q2?
Yes, I think so. Q2 and the bigger jump comes in Q3. So over the coming 4 quarters, you'll always see that there are averaging out happening, and the leverages start working in Q3 where the sales go up, but your cost remains under control. So that's going to be very, very important. But yes, I think that in Q2 itself, we'll see some amount of improvement, and Q3 also will see a larger improvement. And that's how our 7.5% would continue to remain. Like, see, in terms of stud ratio, there is a lot of new collections, designs coming up with engagement with the consumers are happening. Very recently, if you've seen, we've launched men's jewelry in titanium, which is one of its kind and the first of its kind for the Indian jewelry industry in the organized sector. So we are coming up with innovation and new designs just to make sure that either be the young generation or consumers are continuously attracted towards us as a brand.
And Suvankar, again, if you can try and give us a perspective. One is, of course, studded, and the kind of mix that'll likely aid the margin number. But from the kind of base you're currently operating out of in terms of margin, what's the lever there? Because it's not like studded didn't work for you in Q1.
No, studded worked, but it's been at about 11%. So if we take it a little better and make it closer to 12%, that will have a positive impact if you really look at it in that particular manner. Second is that we have about 12, 13 stores in the pipeline that is coming up in Q2. And I think that those additional stores will help us again with the top line and the bottom line as well. We are aware that in particular Q1, again, I'm reiterating that after the first month of April, May and June has been challenging. There's a lot of discount schemes that had to be given in order to ensure that the consumers were coming and the footfalls were there. But I can see very much so that Q2, July, August, September, consumer sentiments are improving. People are planning for the upcoming wedding season, and purchases are happening much more smoothly, which I also would feel that, yes, it will have its positive impact on the margins as well. So these are your simple levers. You open new stores, you focus on studded ratio, you ensure that you are controlling your schemes, offers, discounts, and I think 7.5% should not be a challenge.
And same store sales growth, you've done very well on that particular metric. So essentially, Suvankar, is this quarter more of a quarter where you can say you are focused more on volume and value rather than on profitability? You wanted to get the consumer in, you wanted to make the sales required, and maybe hope that repeat consumers come back to you in Q2 and Q3 when the season actually kicks in? Is that broadly the way one thinks of it? Also, give us the volume versus value split, rather just the volume number for Q1.
So I'll tell you that Q1, whenever you begin the year, you must begin it with a bang and have a very positive sentiment at the stores with the team. So you have to, try your level best to engage with the consumers and have a very strong target for your team so that you feel very good for the whole year. So I think you have rightly said that it has been a more of number, volume, and value driven rather than looking at, where am I making more profit, more, or where am I making less profit? Because it's the beginning of the year, you engage with the consumers, and then you wait for the whole year to span out accordingly. And if you look at it, that in terms of value growth versus volume growth, I must tell you that while we have grown 61%, 67% overall in value terms, but in terms of volume, we are down by 2.5%. So what are we looking at? We are looking at creating lighter weight jewelry, which is going to drive the consumers into the stores. We are looking at experimenting with lower caratages, 9, 14, 18 carats, because we need to make jewelry that is fitting into the budget of the consumer. And I must also tell you that this quarter, the team has worked on reducing the number of inventory days. So we have, been optimizing it. We've been doing it for the last 1.5 years to have the right stock, and especially when the gold prices have moved up so much. So those have been certain areas where we have worked upon on the efficiencies, and we'll soon see the results coming in as the year progresses.
Okay, Suvankar, thank you so much for coming in and speaking to us and giving us that perspective with regard to Q1 numbers.
Thank you.
Well, stock obviously in focus and under pressure, 13% lower. But essentially what Suvankar has said is completely focused on driving growth and taking a bit of a knock on profitability as a result. But maybe that unwinds for the rest of the year. And he seems quite confident of the 7.5% kind of margin number for the full year. That's what the guidance seems to suggest. I'll just quickly pull out the full year number. They've done 12% for FY26. So that margin trim to 7%, of course, is obviously lower in that sense. But FY26 was also an exceptional year. I recall him saying that in the last conversation we had. Time to slip into a very short break. We'll come back with plenty of stocks to talk about. And of course, we will have our guests who will give us their perspective of markets. Stay with us. Welcome back. And, some of the movers in trade this afternoon as we speak, I just want to quickly mark out. Godrej Consumers is down 11%. Management change. Mannapuram is also down 2%. You've got a new CEO, which is going to be coming in from the 1st of January 2027. Diamond Power, MCX, Satvik Green, just about holding in the green. On the back of numbers, also you've got plenty of buzzers. Senco Gold is down 13.5% odd. Piccadilly Agro is down 12 odd%. PI Industries is down 10%. There's a very sharp knock on both margins as well as top line for PI. Vikran Engineering is down 9. You've got TD Power though flying high, 18% higher. Bata, which was up 4 to 5% in early minutes of trade, has cooled off from the top. In terms of results that have come out today, also you have lots of movers. 5% lower on AIA Engineering. Kaplan Point is down 4.8%. EID Parry down 3%. 16% move on TCPL Packaging. Second straight day of move for that one. Marksons is up 13. Phenolex is up 8%. Again, second straight day of moves. Very strong ones. So that's really the tilt of the trade. Let me go across to Deepan Mehta. He's joining us. Elixir Equities. Deepan, the earnings coming thick and fast at us. But first off, these big management changes which have been weighed down upon us over the last maybe 24 hours or so, started with Godrej Consumer, and now we have the Tata Sons chairman suggesting that he will be stepping down in February. How big of a change does this mean? Because you're seeing the kind of knock on stock prices. TCS is down 5%.
Yeah, good afternoon, Harsh, and thank you for
Good
having me on
afternoon.
your show. So, I just want to say that when the earlier chairman, Cyrus Mistry, also when he resigned, it was exactly like this. There was so much of uncertainty. Tata Group share prices also fell after that. There was it was not clear who would be the next CMD of Tata Sons. And then we have Mr. N. Chandra, and what a fantastic run he has had. He did so much of wealth for shareholders. So I'm not too perturbed about this development. In fact, if you're contemplating buying any Tata Group share, then this is a great opportunity. You're getting these shares 4-5% cheaper. They have a superb talent pool, the Tata Group, and they'll find an appropriate chairman and executive and MD to take over the reins of Tata Sons. The more important thing is that all the companies, they have very solid leadership, and they've been able to guide those companies, be it Indian Hotels or Tata Steel or Tata Motors. Their second line of CEOs for the companies is phenomenal, and they keep attracting excellent talent. So I'm not too perturbed. Also, it's very, very unfortunate that Mr. Chandra has resigned. But I think, it'll be business as usual as soon as the new CMD is announced. So I'm not too perturbed about this development. I've seen this actually happen when Mr. Mistry resigned and then Mr. Chandra came on board, and he has done magic. So I'm sure the next managing director, CMD, also will be able to carry on with the excellent work done by his predecessors.
Wonderful view coming in. The leadership doesn't change the ethos. I think that's where you're coming from, Deepan. What should you buy at a point of time like this? Where is the value or the risk reward looking the best? This is, of course, an opportunity, as you said, Deepan.
Yeah, I think by and large, apart from TCS, where we are still quite uncertain about the way the AI is going to impact these companies, all Tata Group companies, maybe Tata Chemicals, you can add to the list. I think all Tata Group companies, the prospects are decent, whether it's Tata Motors or Tata Motors passenger vehicle. Tata Steel also, I think, has got its roadmap perfect in place. So I don't think it's much of an issue. I think across the board, investors looking for good corporate governance, steady performance, transparency, and good quality balance sheet. I think then Tata Group certainly fits a lot of those criteria. And maybe TCS is undergoing a bit of a challenge because of AI. Apart from that, I think all the companies are pretty decent. We saw numbers coming in from Trent, from Titan, from Indian Hotels. They were all excellent numbers. So you can pick and choose, I think, assuming that you want to take advantage. And as I'm seeing on your screen, the correction is hardly anything. I mean, it's 1% or so for Indian Hotels and Trent and Titan. So it's not much of a buying opportunity per se, with the exception of maybe TCS. But as I said, TCS is something which we're not quite positive on.
Might as well wait and watch. But technicals, Kunal, would a short-term bet play out within the Tata Group at all?
Yeah, this could be a good time to try and look at buying the quality names for the Tata Group of stocks in case if there's any kind of a further drop down into these names, because this generally throws in a good opportunity for long-term investors to buy quality. And when you see stocks, for example, which have done exceptionally well, look at Titan, for example, that stock has done phenomenally well. TCS also, I think, largely, except for this AI correction, the stock has largely done very well. So many of the Tata Group of names have done phenomenally well. We generally look at these kind of instances into the stock price as an opportunity where long-term investors, either they could probably try to look to accumulate further or build up their portfolio by taking fresh bets.
Okay, what we'll do is slip in a very short break, come back. I want to discuss some stocks which have actually done very well month to date. I mean, it's just been 10 or maybe 8 trading sessions of the month. But when you're looking at some movers, Sapphire Foods is up 30%. We'll talk QSR on the other side. I'll quickly take a view from Deepan on the other side of this break with regard to QSR and how he's placing his bets there. Stay with us. Well, Grasim's numbers are out, and it's a very solid beat across the board from the Grasim numbers that we're reading through. The revenue number has come in at 11,795 versus the 12,121 crore number. That's a tad bit lower than what was getting penciled in. The EBITDA number, though, at 950 crore, very impressive versus our expectation of 737 crore, which means that the margins which were expected to come in at 6.1% have actually come in at 8.1%. It's a solid beat. And the profitability also reflecting that, 247 crore of PAT versus the 84 crore number which was penciled in. So you're seeing a very, very strong set of numbers. By the way, this is, of course, standalone numbers for you. The consolidated would technically include Ultratech, and these are the standalone numbers of Grasim that you're seeing on your screen. Clearly, there's good traction in the business. We'll have to wait and watch as to what's really outperformed between chemicals and the fiber business. We'll try and figure that out as well and give you a quick update with regard to that. But revenue largely in line, PAT and EBITDA margins is where the beat is coming from. Deepan, very quickly, I don't know if you have a view with regard to Grasim in particular. The numbers look strong. And if not, how do you look at chemicals and textiles in general as well? If you can give us your perspective.
Yeah, generally we like to avoid diversified businesses because there are just too many moving parts. And if one division does well, other doesn't do well. And one doesn't get a clear-cut play on a specific investment theme. So would avoid holding companies to diversified plays like Grasim. If you want to buy cement, then of course Ultratech is there. It's a great story. And when it comes to paints, there's so much of choice, right from the newly merged JSW Dulux to Asian Paints and some of the other companies over there. So would prefer standalone businesses, focused companies rather than diversified plays. So I would avoid Grasim from that point of view. It's not that the stock is quite cheap as well. And still, I think a lot of businesses of Grasim are scaling up.
I mean, Birla Opus, for example, and we'll have to track that on the con call as well as to what they're saying on Birla Opus. You say not cheap, trades at around 46 times Deepan, which is trailing 12 months. FY26 is what we're looking at in terms of valuations. Clearly, not the cheapest story available. But Kunal, Grasim, as well as some of the conglomerates on charts, if you can give us a sense. I'll also throw in a Reliance, for example, and M&M, for example. How are some of these stocks and stories looking?
See, I think largely Grasim has been performing quite well. It's just that the stock in the last, I think, 2-3 weeks had run up almost 300 points from 3,000 levels as a base towards 3,300, where the stock was trading around. So I think it's largely built into the expectations of traders going into the results for the stock price. I would sense that the stock should consolidate over the year for a few more days. On the other hand, Reliance Industries, I think the stock has been stuck around this 1,300 levels. There was a good move for the stock price almost a week or two back, where it moved up from 1270, 1280 levels towards 1330, 1340 mark. But then the stock has drifted back again towards the midpoint of this trading range. So it looks like that the stock would probably take some bit of more time to try and come back on the upper side. The view on the short-term charts is still bullish for Reliance Industries, and I think that this dip should be bought into. Same is the case with M&M. The stock, I think, has done reasonably well. I've been bullish on the entire auto pack, and my expectation is that I think M&M at 3,300, 3,200 mark, I think could be a good contra bet at the current juncture.
Okay, what we'll do is slip in a very short break, come back, staying with Deepan and Kunal, and we'll be joined by Nagaraj Chetty as well on the other side. Stay with us. Welcome back. Plenty of themes playing out, and Deepan, especially textiles. The numbers here have been particularly strong, and I also want to welcome on board Nagaraj Chetty of HDFC Securities. He'll be here in a minute or so. But Deepan, very quickly, textiles as a pack, is that something you're positive on? How do you play that theme? Do you look at those kinds of players, the PDS and the Pearl Globals of the world, where they're export facing?
Yeah, absolutely. I think with rupee we are at 96 and a lot of free trade agreements getting operationalized especially UK, India to already is operationalized, and then there's the India EU free trade. And if we are able to get into an agreement with US, then that will open a very good opportunity for Indian apparel manufacturers and exporters. So very positive. I think Pearl Global came with an exceptionally good set of numbers, multi-locational manufacturing, diversified markets, and very strong relationships. Same is true for even Gokuldas Exports and PDS as well. So very positive on the entire segment. One dark horse, again, usual disclosure, is Kitex Garment. And they have merged their private company, which is also into children wear, into the listed entity. And last few years, the performance has been a bit disappointing. But now I think, with the merger in place, all corporate governance issues behind, and looking at the kind of potential which is there, we're very positive on this company, which is very attractively valued also, considering its potential to deliver top line, bottom line.
All right, Deepan, it's been a brief conversation, but it's been a productive one. Thank you so much for coming in and giving us that perspective. We'll let you go. All right, Nagaraj Shetty joining us of HDFC Securities. Nagaraj, let's quickly have your view on the market. 24,300 now, really being put to the test. What next?
Good afternoon, Haj. Thank you for having me. Yes, Nifty has been a consolidation phase. In fact, in a downward correction, the downside momentum seems to have picked up after 4-5 days of range bound action. The trend remains weak right now, and some more weakness is likely in the near term. At least 24,000, 24,100 is going to offer support from the market, and I'm expecting a bounce from the lower levels. It's going to be a kind of a buy and dips opportunity at the lower levels.
Okay. What's the upside from here, Nagaraj, and how quickly does that materialize, in your opinion?
Yeah, Nifty, I think I'm expecting a decline from here onwards, and I think 24,000 to 24,100 is the area where important support cluster comes in. So I'm expecting a bounce from lower levels, and once it make a bounce from the lows, then I am expecting 24,500, 600 is going to be the next upside to be watched from the lower levels.
Sectors, Nagaraj, because IT has done ever so well, at least last month and a half or so. Will it continue to outperform? Will there be other sectors which come to the fore?
I'm betting on metal and PSU banking. PSU banking, in fact, was in a downtrend recently. We have seen some sharp weakness in this sector and has bounced back convincingly in today's session. I'm expecting more upside in the PSU banking as well as the PSU banking stocks in the, at least for the short term, and the metal as well. Frontline and mid-cap metals are likely to outperform in the short term.
And names, Nagaraj, your top picks?
I have two picks, actually, one from banking, as I mentioned. The Maharashtra Bank has been in a downward correction over the last 1 month. We have seen some range bound action, made a higher bottom as per the larger degree, looking attractive, moved up very well in today's session, indicating a formation of important bottom reversal. Currently trading around 81, 80, 85 levels. One can look to buy at this point of time. 89 is going to be the immediate target, and one can place a stop loss at 78. Second one is Hindustan Copper. After moving into a larger downward correction, Hindustan Copper has witnessed a sharp breakout recently. After a small dip, it has moved up very well in today's session, validating a decisive upside breakout of the downsloping trend line. Technically, this indicates a positive bias, and I'm expecting more upside for Hindustan Copper from here onwards. Currently trading around 549. Immediate target would be around 580. One can place a stop loss at 530.
Okay. Nagaraj, some of the QSR names have done very well for themselves. We're speaking about Devyani, Sapphire. They've been some of the bigger outperformers from the Nifty 500 basket month to date. What next on some of these names?
Sapphire, Devyani moved up similarly in the last 3-4 weeks. I think though they have placed at the higher levels, I don't think the profitable could emerge at the current levels, and more upside is likely. It has moved up very well after a decisive breakout, and more upside I'm expecting in both the stocks in the near term.
Okay. And Nagaraj, just speaking about the Nifty today, this weakness in IT and TCS, should you go out and buy 4.5% lower on TCS today?
TCS moved up very well from the lower levels, from 2000 to almost 2500 levels, and some sizable downward correction is likely as per the pattern. I'm expecting some more weakness in the IT as well as in the frontline IT stocks, at least in the short term, and where that could bounce back from the lower levels after a session.
And last off, hospitals, that entire pack also has come under some bit of pressure, Nagaraj, last couple of days. Max Health is down 3% more today. In fact, we spoke with the management of Max Health earlier this morning. There's also Apollo Hospitals, which will come out with numbers, but taking a 2% knock on the stock today as well as, of course, yesterday. What's next on some of the hospital names?
Trend remains weak for the hospitals, Apollo, as well as the other stock you mentioned. I think for the Apollo, after a sustained up move, it has witnessed a breakdown recent in the last two sessions, and I think more weakness is likely. And downside support should be watched around 8,250 somewhere for the Apollo Hospital. So overall, chart pattern is looking negative at this point of time, and I'm expecting more weakness.
All right, Nagara, thank you so much for joining us, giving us that perspective. We'll let you go. Well, that's ideas and thoughts from Nagaraj Shetty. We'll slip into a very short break, come back. We'll chat with Kunal because his 11% knock on Godrej Consumer certainly not looking pretty. We'll get a sense from him as to how he's looking at this one on charts, along with other buzzers, of course, in trade. On the other side, stay with us.
Back with closing trades right here on ET Now, and while the index is down about 0.5%, and of course key pressure points are some of the Tata Group companies like TCS, which is now down over 4%, and that weakness, quite frankly, is also rubbing off on some of the other IT majors. But that aside, look at a Tata Consumer as well. On last count, it's fallen about 2%. There's Tata Motors PV, which is down about 1.5% as we speak right now. Even Titan is down 1% as we speak. Trend less than 1% lower, but yes, in the red regardless. But on the flip side, there are names like SBI, which are comforting the index, Hindalco, which is going very strong. And other than that, you are having names like Interglobe Aviation, a BEL, Bajaj Auto, and a Kotak, which are somewhat managing to stay afloat. Better a day for the broader end of the market. While there too, there are those individual losers like a Godrej Consumer Products, which is now at the session lows. It's down 11%. PI Industries, which is down about 9%. Fortis, which is down 6%. And then LTM, which is also knocked off about 3%. But then there is a Nalco, on the other hand, which is spurt up over 8% on the futures as we speak, almost nudging that 419, 420 per share mark. Force Motors has been one of the most astounding stories of the last year to date, whichever time period you may want to take out for a Force Motors. And yes, after SBI's earnings, you're seeing a renewed vigor across the PSBs. So PNB as well holding up a good 4.5% or 4% actually as we speak right now. BHEL and Keynes as well is rebounding into the weakness that it saw of late. Keynes, in fact, has shot up. We can just bring up the intraday graph. That's shot up about 3.5%, and the spurt has come in just the last few minutes on Keynes Technology. But let's welcome on board Amrish Baliga as well on the show. We still have Kunal Bothra with us and find out what he's making of the market right now. Amrish, hi, afternoon. I guess all the dinner table conversations will circle around N. Chandra. But this dip in the Tata Group companies, rightfully as you're seeing sentimental knee-jerk reaction, are they buying opportunities for any of these names?
Good afternoon, Aisha. We have been speculating about N. Chandra possibly stepping down. This has been on for a while. But then finally, when it comes out in black and white, it has an effect. And that's exactly what we are seeing now. It's a knee-jerk reaction. So you'll see most of the stocks coming down for the next possibly a few days. But then, just look at the history. We have seen these sort of issues, much larger issues, as far as Tata Group goes in the past. Especially in 1991 when Ratan Tata took over. That was a major problem. We didn't even know whether Tata Group would remain as a single group or whether it'll get split. And then we had Cyrus Mistri's issue recently. So they have overcome all that. So it's only a matter of time. I think over the next 6 months, surely before Mr. Chandra steps down I mean, there should be a new candidate in place. And the way I see it is possibly it could be an insider itself. I mean, than an outsider. So once that name is announced, I think things will be back to normal. So I don't think one needs to really worry too much. I mean, as far as the prices are concerned, I think a fall is a buying opportunity from a longer perspective.
Any specific stocks that you would recommend within the Tata Group? Should they fall further, they look attractive?
No, I mean, I would go with the Tata Steel and I mean Tata Motors, the PV. I mean, these two would be my favorites to start off with. Tata Consumer, I would be a bit cautious because I mean the only fallout of this is I think big basket could be an issue going ahead because that was one of the major issues between N. Chandra and the board. So the future of big basket is a question mark, which in a way supports Tata Consumer. So I would be a bit cautious as far as that is concerned.
Okay, let's move away from the Tata Group names. And Kunal, just a couple of buzzers out there. Force Motors, of course, and then there is Keynes, that huge spot which has just come in on the stock. And the one strongest of the lot, Hindalco today. What's the read-through on all these charts?
So Force is very interesting because I think the last 4 or 5 months, the stock went into almost like a 20 or 25% correction from 24,000, 24,500 towards 17,500 for Force Motors. That I believe could be a very good opportunity for investors to try and look at the stock price, because when you look at 2023, 24 and 25, these three were stellar years for Force Motors, and the stock has done pretty well for itself over the last 3 years. So I believe that even after this 4-5% up move for Force Motors, this could be a very good buying opportunity for someone who missed out in participating in the previous leg when the stock jumped up towards 24,000 plus mark. Keynes on the other hand, I think would be just about a short-term bet so far. The stock is a little bit more volatile. It's trying to grapple into a breakout about 3,850 mark, 3,950 levels over the short term. Last week also the stock was on the verge of breaking that 3,940 levels. But from there, the stock slipped almost 200 to 50 points. So which means that the volatility for the stock could be a little bit more on the higher side. I would wait for a confirmation about 3950 mark for establishing a breakout on Keynes Technology.
Okay, so that's the tilt. Just in terms of the buzzers, and Godrej Consumer is the one big calamity of the day, 12% lower. Kunal, stock badgered out of shape in terms of charts, but what next?
Yeah, I think it's a deep correction for the stock price, because when you look at this from 2024 highs for Godrej Consumers, the stock was almost at 1500. It's now come back towards 900 mark. This takes the stock back towards almost till 2022-23, when the stock was almost at 900 levels and slightly lower than that. So it's almost like the last 4 or 5 years, the stock has given flattish kind of a return. But when I look at this at as the entire FMCG pack, there have been very, very few stocks which have actually traded with a positive bias over the last 6 months or so. Majority of the stocks in the entire FMCG space has gone through a correction, or maybe the trader participation has dropped down to the stock price. Now, in many cases, we've seen that such kind of a sharp correction, even if it gets a bit of a follow through, the fall generally gets arrested. I would sense that maybe closer to 850 could be a good zone where Godrej Consumers could come back into a contra buy, wherein the risk reward from a long-term perspective would start to look attractive. So far the trading framework for the stock was on the negative side, but maybe another 4 or 5% correction on the downside, close to 850 mark. I think that's where long-term investors as well as medium-term traders with a time frame, they should start to look at the stock on a positive basis.
The other set of stocks which have done very well this earnings season is cables and wires companies. Finolex Cables is up for a second straight day, 5% plus gains for a second straight day in trade today. Amrish, I wonder if you have a view in this pack, or has a lot of the upside already been priced in?
I think most of the stocks have performed extremely well. And clearly, I think whatever earnings have been shown, I think it's mostly in the price at this point of time. And we've also seen copper prices going up, because of which the final product prices also have moved up. They have seen inventory gains, but this may not last too long. So I would suggest that utilize this good up move and at least book some profits in, wires and cable companies.
Okay, that's the take coming in right now on the wires and cable segment. In the meantime, the market just adjusting itself to, the weakness that one is seeing, led by the Tata Group names. And other than that as well, healthcare as a pack, given the high concentration now within the healthcare space, that also is weighing weight on the markets. And then, of course, you've got the likes of Reliance, absolutely flat, M&M, L&T, Axis Bank, Bajaj Finance. These two are also a drag on the index as we speak. On that note, let's take a very quick break. We'll come right back, continue tracking markets.
All right, welcome back. And are we here with some of the stocks that you want to keep on your radar for today's trade? Some big buzzers, of course, last 3 minutes. And thereafter, we will also have the cash segment starting. But before that, Avi.
Let's have a look at some of the stocks that are buzzing in trade. Starting off from Marksans Pharma, which came out with its earnings and they are very strong. The profit has increased more than 2.5 to 3 times, while the revenue is up 35%. The EBITDA is coming at 213 crore rupees, while the margins have expanded substantially from 16.1% to now coming in at 25.3%. And that is the reason the stock saw a very sharp rally. Up next is Godrej Consumer, which is down 10% on back of leadership exit. The current MD and CEO, Mr. Sudhir Sitapati, has resigned with immediate effect, and he was in the leadership position since October 18, 2021. His presence as a leader was instrumental to the growth of the company, and investors are extremely concerned about his exit. Up next is Man Industries. The stock saw some very sharp rally on back of its earnings. The revenue is up 40%. The EBITDA margins have expanded by more than 3%, while the EBITDA is up 90%. The profits have also doubled for the company, which is why the stock is seeing some sharp rally. Up next is PI Industries, a very poor set of earnings from the company, and the stock is under selling pressure with revenue down 10%, EBITDA down 29%, and the margins have contracted by almost 5 to 6%, while the profit is also down by 40%. So that is the reason PI Industries is under the radar. Our last pick would be Polyplex. It's a very strange case as to the numbers are very, very strong, and yet the stock gave a negative reaction. Although in the pre-opening the stock was up around 2.5%, but as of now the stock is currently down to 2.5%. The revenue had increased by 30%, while the EBITDA was a positive 296 crore rupees versus a negative 1.22 crore rupees, while the profit was at 91 crore rupees compared to a loss of 19 crore rupees for the same period last year. So opposite reaction in the case of Polyplex. So those are the stocks buzzing in trade.
Right, Ravi, thanks for flagging off all the buzzers in trade. In fact, just want to take stock of what some of those names may be doing right now in trade. And let's just bring them up one by one and tell you how they've been performing. A Marksans Pharma should come up for you on your screens, while the Nifty is settling down about 0.5% lower. A Godrej Consumer, of course, after Sudhir Sitapati resigning from the role of MD and CEO, and now Asif Malbari, who's been appointed and given a leg up from his current role as the CFO. There's a Man Industries reacting to the numbers, PI Industries and Polyplex, which are all reacting to their earnings. Amrish, it's been an interesting set and definitely beaten the market expectations all through this Q1. Within mid and small caps specifically, did you identify any opportunities wherein the numbers perhaps way far exceeded what you were anticipating from within the mid and small caps?
No, see, in the mid and small caps, one pocket which I've liked, most of the numbers have been quite decent, has been specialty chemicals, which is where I've been recommending now for the last, 3 or 4 quarters. But it took a while. But I think from here on, we should see better numbers coming quarter on quarter as far as specialty chemicals is concerned. So I think that's one space to be looked at.
Okay. Godrej Consumer and this fall in stock price, Amrish, how do you look at the stock and an opportunity perhaps? Is that how you see it?
I don't think it's an opportunity right now because this was a bit of a surprise because I think he was reappointed just some time back and was expected to continue. So, and the sort of a note also which has been written to Ms. Godrej, I think, there is, I think people need to read between the lines. So I think it would be negative as far as Godrej Consumer is concerned, at least for the time being. I think we need to wait and watch as to who the next CEO would be. At least the permanent CEO would be.
Kunal, how would you approach this dip on GCPL? I mean, while the tide clearly in the markets is not quite favoring FMCG, but could this be a ripe buying opportunity perhaps?
I think it should be a good buying opportunity. I think from here on starts a point where every dip should be taken as a value buy for Godrej consumers. It has a very strong pedigree. The stock went through a major price-wise correction over the last 2 years, approximately from 1500 to 1900, where the stock is trading right now. Time-wise also, when you look at this from 2022, the stock has been literally flattish or has come back to 2021-22 levels, so which means for the last 4 or 5 years, we can say the stock has given flattish returns. So time-wise, price-wise, I think Godrej Consumer should be taken as a stock which should be bought in from a long-term perspective. The critical aspect which we typically look out for is that when stocks fall into such kind of a sharp correction, the weekly and the monthly charts come back into oversold territory. That takes a process of another couple of days or maybe a week odd for the stock prices to show those signs emerging. So that's why I would believe that maybe from current levels, if there's another 4 or 5% of a drop down towards 850 mark, that could be a very good level for long-term investors, medium-term traders to start chipping into the stock.
Okay, that's the take coming in on Godrej Consumer. But Apollo Hospitals, given the bout of weakness that you're seeing in the healthcare names actually play out, I mean, look at the timing. It's also set to announce its Q1 print as well. And what is it that we're penciling in from the numbers? Let me take it across to Meryl to understand that better.
Right, so Apollo Hospitals is expected to deliver its first quarter results soon, and in terms of numbers, we're looking at a strong first quarter that's expected. Revenues are estimated up nearly 18 to 20% on a year-on-year basis. Net profit also seen rising upwards of 25%, while EBITDA margins are also seen improved marginally. The key driver for the company is likely to be its hospital business, with high teen sales growth expected on the back of healthy volumes, new beds coming online, and also a high single-digit growth in the company's ARPP metric. Healthco is also expected to grow around 20% on a year-on-year basis, while 24/7 could be seeing high single-digit sequential GMV growth. At the group level, if we talk about margins, then margins are expected to remain broadly stable, although new hospital launches could be seen weighing slightly on the company's total sequential margins. For investors, the key thing to watch out for will be the ramp up of the new capacity that's going to come online, occupancy trends as well as ARPP trends, expansion into the tier 2 and tier 3 cities, which was highlighted as a major growth factor for the company, and also the update on AHLL's merger with Cloud9. So these are all of the important factors as well as key monitorables that investors should look out for when it comes to Apollo Hospitals' first quarter numbers.
All right, okay, thank you so much for that, Meryl. The healthcare space, I wonder how you're looking at it on charts, Kunal. We have seen a couple of days where we've seen some pressure creeping in. Is the dip small enough to warrant good risk reward on charts?
See, the only concern over here, what happens is that when there is a high volume sell-off for stock prices, which apparently have done very well for themselves over the last few weeks, we generally wait for the volumes to abate and the selling pressure to drop down significantly. Because what happens post that is after a few days of selling on the back of higher volumes, the stock may go into a stagnation, where the trader participation drops down. Investors, they generally tend to watch out for, say, a better news flow emerging into the stock price or not. So I think over the next couple of days, my sense is that we'll wait for a point where the volume drops down significantly, the price activity comes back into a bit of a lull or a consolidation. That's where I would sense that opportunities could arise. And I think the few names which have done phenomenally well, look at Max Healthcare, look at Apollo Hospital, Fortis, as a larger construct, I think these stocks have done exceptionally well on the longer term basis. So this could be a very good opportunity for someone who missed out on the hospital segment earlier. But I would sense that just maybe wait for another a couple of weeks, let the price and the volume drop down significantly for the stock prices. Then I would sense that a good buying opportunity could emerge.
Okay, that's the take coming in on Fortis Healthcare. In the meantime, just looking at Force Motors, and that's really, quite an astounding move on the stock right now as we speak. And Amrish, I mean, autos and auto anchs has been one really resilient and buoyant pocket of late that one has seen. I mean, be it the high frequency indicators, like what you've seen in terms of the monthly sales data, irrespective of, how scattered the monsoon has been, or for that matter, earnings as well across the, categories, two-wheelers, EVs, what have you. any new buying opportunities or fresh opportunities that you've identified?
In fact, in the auto space, I would surely go with some of the auto ancillaries. I think that's where I think there is still a decent amount of upside left. And when it comes to, I mean, auto majors, I would possibly go with the two-wheelers like a TVS or a Bajaj at this point of time. I mean, despite, I mean, the macro headwinds, despite the geopolitical issues, you just see the numbers month on month. I mean, they have been improving all through. And despite the sort of raw material price hike which has happened, and part of that also has not been passed on. It will be passed on now from this month onwards. So I think over the next 1 or 2 quarters, I think we should see better numbers even from the auto majors. So when it comes to auto majors, like I said, we should look at, I mean, a TVS or a Bajaj Auto in two-wheelers. When it comes to, I mean, passenger cars, I would look at Tata Motors passenger cars. And I mean, among, I mean, the auto ancillaries, I would surely look at something like Endurance Technologies, where I have a price target of about 3,500, 3,520.
Okay. All right. I want to quickly also start pointing out stocks which are moving in the cash segment and try and see which ones are really standing out. The Nifty itself, there's not much of a move. Let's pull out the Nifty chart and see whether that's holding up 1/3% lower in the last maybe 7 to 8 minutes is what we're seeing on the Nifty. So some bit of in fact, 1/3% higher, I beg your pardon. So we're seeing a little bit of more strength in the Nifty for the moment, at least since the start of the cash segment. In terms of the movers, there's Kotak Mahindra Bank, which is down around 1.7%. It was in the green, but now sitting in the red, percent thereabouts lower now. And 1.3% higher on Hindalco, 1.2% on Nestle. Titan is the other one, nearly 1% higher in the cash segment. So some recovery that's being visibly seen in some of these names. Bajaj Finance also 0.9% higher. But Sajid, let me toss it across to you. What do you see?
The Nifty up nearly 0.35% in the cash segment, and that's primarily led by you have Hindalco, Nestle, Titan, Bajaj Finance. There is some pressure which is coming in with respect to Kotak, M&M, Maruti and Shriram, where we have seen more than 1% fall coming in. It's little surprising that you're seeing that kind of sell figures which are coming in the cash segment for these at this point in time. But if you look at the total volumes on the cash segment, it was pretty much around 1,000 odd crores last when I checked. And that's something which until unless you're going to see a good amount of turnover coming in. 1,300 crores is a turnover which we have seen so far, and imbalance volumes sell figures are there on if I HDFC, there is a 9 lakh buy figure on LIC which is coming. There's an imbalance volume which is coming in. You look at another Tech Mahindra where the negative 6.96 lakh shares are the negative imbalance volume which is coming, which basically means there are more sellers in the market as compared to buyers in this market. There's another Eternal is seeing some sell volumes coming in. So it is it's interesting to see you have good amount of selling which is sell volumes coming, but no buyers which are there at this point in time in some of the stocks, and that's why you're seeing some pressure which is coming into Kotak and others, where we have seen at market order there is roughly around 5.33 lakh net imbalance volume in Kotak, and that's what is reflecting in the in the cash numbers as well, because Kotak has seen nearly 0.7% fall in cash as we speak, and among other companies which are seeing good amount of negative pressure which is coming in, it's M&M. You have which is 0.5% down. Kotak is 0.5% down. You have Maruti which is down 0.5%. Shriram Finance is down 1/4 of a percent there. So there is Bharti has come up incidentally. There's some talks going on. We don't have a confirmation, but some of the tariff, random tariffs levels have been, tariff rates have been discontinued for Bharti, and that's what I think we're seeing some kind of thing. So 299, 579, 619 and 649 prepaid plans have been discontinued. That's what some news is coming in. We need to confirm that, and we're seeing that jump coming up in Bharti in the last few minutes. Actually, the stock up nearly 1.17% in today's trade.
Okay, let me go across to Ashesha. She's here with perspective on why aluminium stocks were in focus today. There is Norsk Hydro, which has cut Brazil alumina output by 50% due to gas shortage. Company eyes purchase spot gas volumes to offset the shortfall. Ashesha here with all of the details.
Well, yes, so the entire basket has been in focus since morning. In fact, some counters like Nalco have been gaining anywhere between 7 to 7.5%. We have Vedanta Aluminium, the demerged arm of Vedanta Limited, is also gaining. And we also have Hindalco, which is up 3%. And as you rightly mentioned, Norsk Hydro, which is one of the largest aluminium players globally, has gone ahead and said that they are cutting production at one of their refineries on account of gas shortage, which is why there is fear of supply disruption in the global market, because this refinery is a big output creator for global aluminium market, and that is exactly why aluminium prices on the global market have also risen. In fact, on London Metal Exchange, aluminium prices rose by about 1.5% yesterday. They've risen nearly 5% for the month so far, and aluminium prices are now trading above that $3,350 per ounce. Now, the company's refinery is important for global aluminium supply, but they've also said that they are securing spot purchases, and if that comes through, then probably a supply is likely to resume very soon. But for now, the fears of supply concern is why aluminium prices in the global market are rising, and that of course is a positive for aluminium players like Nalco, Hindalco and Vedanta, because realizations for them are directly linked to aluminium prices on the London Metal Exchange, and that is exactly why all these three players are gaining in trade today.
Okay. All right. Thank you so much for that, Ashesha. Kunal, metals shining today in trade. How's it looking? Give us a perspective to you.
Yeah, I think the sector is looking quite charged up. I think over the last couple of days, we had Hindalco, which was outshining or outclassing many of the other peers. Today, I think it's Nalco, which has done reasonably well. Again, I think many of these metal counters, when you look at this in the construct of the last 3 months, where, for example, Nalco was almost at 440. The stock had fallen down almost 20% towards 340 levels, and now back again towards 420 mark approximately. So that tells you that a major retracement for many of these metal stocks has been completed. We are looking at a restarting of the cycle where the metal counters have come back towards a major retracement as well as a rally. I will be bullish on the metal counters from here on. Hindalco is something which I've been flagging off, but I would sense that even the likes of Tata Steel has started to look attractive at the 189, 190 mark.
Bharti, SBI and Hindalco are leading the pack today actually, and good rebound coming in because of Bharti, especially contributing to 20 points, nearly more than 1% contribution coming in the cash for Bharti.
And TCS also is seeing a decent recovery from the lows, 0.5% odd in terms of the recovery from the low on TCS, visibly so in the cash segment. Now we're still 4% lower on the stock price, but nonetheless some bit of a recovery playing out. M&M on the other hand playing the reverse. You've seen some pressure on the stock in the cash segment, 0.5% lower on the counter. Some choppiness visible today versus earlier. Kunal, what's your observation? Last couple of days has been more stable. Today looks a little more choppy.
No, I think it's because of the specific stocks in the last, I think 5-10 minutes is because the swing could have been a little bit more higher than the last couple of days. But I would sense that this could be a part and parcel. I think we have to be accustomed towards news flows coming after 3:15 for individual stock prices, and that too for large cap names. So the markets have to find its way out in terms of adjusting to this new reality as well as the kind of news flow which surrounds the stock prices.
Okay. All right. Amrish, leave us with an idea. Give us something which is standing out for you.
I mean, if you look at today's trade, I would say Bharti is something one should be looking at, because I think removal of the lower packs will clearly improve the ARPUs. And the management had a target of 300 as a ARPU for this year. I think that should be achieved quite soon, because I mean, we should remember that telecom is not a discretionary spend; it's a non-discretionary spend. So, irrespective of how much the pack prices go up, people will possibly spend less on others, but will continue to spend on telecom.
Amrish, finally, do you think that Bharti has started off with the discontinuation of a base pack? Now others will follow Vodafone and Jio?
Absolutely, because there are just three of them, at least now. Vodafone is back in the reckoning to a certain extent. So I think Vodafone would be the last to increase the prices, because they would like to get subscribers in case someone moves out from Jio or Bharti. I mean, they need low-cost, telecom providers. So Vodafone may be the last one to increase. So I think the next one would be Jio for sure.
Okay, we'll slip into a very short break, come back, talk more. Amrish, be with us. Kunal, of course, will continue to be with us as well. We'll chat a little bit more on the other side. Stay with us.
Welcome back. You're watching Closing Trade, and we just got over with the cash session, closing auction session, and we also have this SEBI chairman Tuhin Kantapande calling the closing auction session or cash a microstructure reform for India's securities market. He said India still lags other countries in cash implementation, and the regulator is seeking wider participation. Please listen in.
कि जो कैश है वो एक बहुत बड़ा माइक्रो स्ट्रक्चर रिफॉर्म है और हम लोग एक्चुअली पीछे रहे हैं बहुत सारे जो ऑल ग्लोबल हमारे काउंटर पार्ट्स हैं वो ऑलरेडी कर चुके हैं सारे इंडिकेटिव प्राइसेस किस प्राइसेस पे मैक्सिमम बिड्स कवर हो रहे हैं सिर्फ ये कंसोलिडेट करता है को बिड्स ताकि एक पर्टिकुलर बहुत ज़्यादा और उसमें भी रैंडम क्लोज है क्योंकि रैंडम क्लोज का मतलब है कि उसमें भी और संभावना है कि लास्ट मिनट कोई इस तरह के बिड इम्पैक्ट ना करे इसलिए रैंडम क्लोज भी रखा है अब पार्टिसिपेशन बढ़ाने की ज़रूरत है अधिक से अधिक लोग उसको समझें ब्रोकर्स में बहुत सारे ब्रोकर्स ने इंडिकेटिव प्राइसेस जैसे आई थिंक मुझे लग रहा है ज़ीरोदा है और या अपस्टॉक्स है उन्होंने ऑलरेडी अपने वेब में किए हैं ऐप्स में भी वो करेंगे
That was the SEBI chairman talking about cash. Amrish, what is your take on cash? We're trying to settle down in this new system for nearly 1450 crores of turnover happening today in the last 15 minutes. Price discovery, but I think liquidity is something which is gradually coming up here.
Absolutely, because see, whenever a new system is introduced, you don't have that much of participation to start off with. And clearly, there are also technical issues which are anyway getting sorted out. So I think it's only a question of participation, and with more and more brokers providing that to their end users, I think we should see participation increasing over the next few weeks, if not the next few months. So I think we need to believe in the system and possibly carry on.
Bharti is a classic case today. The news coming out about discontinuation of some base prices and how it's getting traded in the cash segment. Instead of having an irrational movement, I think there's a pooling of orders, and as a result of which Bharti was up over 1%.
Yeah, so I think, here everyone is learning about, whether it's the investors or whether it's the brokers or whether it's the regulator themselves. There is a learning process which is happening in this. So I think things should get sorted out sooner than later.
Kunal, if you remember, at the end of June contract, we were discussing how entire open interest of Bharti futures got split between July and August equally. And August was having a higher open interest position as compared to July. Now it seems that the tariff has come through. Someone who has rolled over the position directly to August may have benefited from it.
Yeah, absolutely. And so it's a rare phenomenon to have a FAR month, contract, the number of open interest being higher than a current month or at the money, month contract for the futures segment, and that was a rarity, and that too for a Nifty 50 stock. Again, it's a lot more rarity. But then I think now it sort of adds up, with the kind of news flow out for the stock price, that the expectation, was towards transferring the contracts from July towards August on the back of this news flow. But I think now this could probably set the tone for Bharti Airtel quite well. And I would sense that the stock should now be able to at least try and come back to the previous highs, swing highs of 2000, 2020 plus for the near term.
Amrish, if you look at the market, how it's closed today, it's come off day's low, but it's just hovering about the 24,430 odd mark there. Do you see more pain coming in given the kind of global uncertainty?
No, I don't see too much of a pain as such. I mean, in fact, I don't see a crack from here. I mean, we could possibly be in a very small range. I really don't see the markets breaking the 24,000 levels because I mean the major issue has been the geopolitical issue, and very clearly I think President Trump is in a corner, so can't really carry on with the war any longer. It's only a question of when they sign off the accord, and I think that should be sooner than later. So I mean, I wouldn't be too negative from that perspective. Any sort of a correction, in fact, I'm utilizing that to buy, because from an India perspective, purely India perspective, monsoons have been better than what the grim forecast we had in June. So that's one positive. Look at all the earnings which have been coming in. Most of them have been better than what was expected. And slowly we are seeing a macro uptick also. So I think one needs to be positive on the Indian markets, utilize any correction to buy.
Take on the mid caps back because today, even if the broader the benchmarks were down, Nifty Bank, Nifty Bank was up 0.7%, led by SBI, but you have the mid cap 150, which is up 1/4%.
Yeah, in fact, I mean, mid caps are the ones, I think, mid cap and some of the, specific small caps are the ones which will possibly give you that alpha in the portfolio as compared to the large cap. So I think it's a good time to concentrate on some of the mid caps.
Kunal, any strategy for tomorrow?
Yeah, I think I'll be bullish on the indices, and I think the last 2 or 3 days we've seen a decent consolidation / correction for the Nifty. We are back again towards a retracement. What we've done is today in the process of the index testing below that 24,300, 350 mark, we've also managed to retest the short-term moving average for the Nifty in the daily charts. On the daily charts, that completes the correction. The recovery in the last, I think, 15-20 minutes or half an hour, made the pattern a bullish hammer for the Nifty on the daily time frame. So a lot of positives to take away. The outperformance of Bank Nifty, I think, is something which is going to be very important with the movement of this 300, 350 plus point for the Bank Nifty. This could probably bring in, some degree of outperformance coming back into the banking name. So bullish on the index over the next couple of days. And my sense is that we should try and look at 24,650 to 800 as a potential near-term target.
Kunal and Amrish, thank you very much for joining us on Closing Trade. That's where we wrap our market today. The Nifty closing 0.15% down at 24,435. The sensex closing at 77,966. And the Nifty Bank up 0.7%, closing at 57,885. That's all we have from Closing Trade. Thank you for watching.